Welcome to the Kendall Report. Yes, this is the final nightly broadcast. The next broadcast will be at 9:15 a.m. on Monday. That's going to be interesting. Hopefully it works out for everybody. It's certainly going to work out for me, so I'm going to do my best to the new format you'll find all about at that point in time. So just make sure. My plan is I may start the pre-wind about 10 minutes ahead of time and just let the room fill up. But I will start as promptly as possible at that 9:15. That's Eastern time. So lots going on. Just looking at some of the chatter before I came on, and we're definitely we're talking about support. If you recall, the number was 3740. I'm looking at 3728. We closed under that number. We're basically on change. So support is dwindling very quickly, and we're starting to see some things I haven't seen for a while, and I will definitely be covering next week in the broadcast. But there is further weakness. There was an opportunity for the market to go up, and there's a lot of people out there now yelling, actually saying it's going to go up. So you know what that means. It probably isn't. But I'll go through a bunch of technicals tonight. As far as I can I can see is this broadcast that I'm going to start and change to the channel will be about an hour and 15 minutes is the plan, from 9:15 to 10:30 is the plan. And as far as the live room, you folks that are in there, then I'll still start the same time, 1 p.m. to 4 p.m. in the live room Monday, Wednesday, Thursday. And there's going to be some other features as we go through the week. So you'll see it'll probably be a little bumpy. I have a plan. We'll see how the plan, sometimes what's on paper doesn't turn out in the real world. So I've got a lot of plans. Everything's going to be not scripted, but timed. And there's going to be segments that are I'm going to adhere very closely to. So you'll find all out about it. I plan on having I'll start to release some things on Twitter. So if you're following me on Twitter, that's PortfolioXpert. There's no E in the expert, so it's Portfolio. I'll do the X, just an expert. Okay, so that will be the plan coming into next week. So let's get into talking about today. The day after Powell, there was no signs of any kind of rally. We were in the live room. There was a couple setups intraday that looked like maybe we could print back up towards the 60 handle or the 3780, but it just quickly faded away. And the way we've been trading has been higher in the morning, sell off in the afternoon. You look for those patterns to change at some point, but we're definitely coming down to some pretty critical levels. I'll cover that in the technicals. So here we are. Everything could change in a moment, right? We've got unemployment numbers coming out, but I have a feeling, listening to Powell and his deliberate methodology, that, and not only that, those of you on our Discord, you know that we've got this news bot and it's very active, and it was talking about, ECB, we must hold the line on prices. We've got to beat inflation. All of these banks, I keep telling you, are actually proxying for the Fed. It's a team effort. I remember going back to 2020 and when the Fed came in and liquefied the market and right after the shutdown. And I remember telling everybody what they need now is the Treasury to spend the money that they're liquefying. And they got the gift of everything, with Biden winning and putting in Grandma Yellen in there in the Treasury to spend the money, save the climate even through the Treasury. It's pretty amazing. The Federal Reserve and the Treasury now is in climate business. I don't know if you folks knew that, but that's what's happening. But the same thing here. Central banks are all in cahoots. It's interesting because the PBOC, the China central bank, just was intervening, doing reverse repos, some pretty good size repos. And it's, so there's a lot of contrast on the planet. And we're just seeing, but on the Western central banks, they're all in sending the same message. You've seen these broadcasts and where the key words are in every broadcaster's mouth. And that's the same thing that you're seeing with the Fed right now. They all have exactly the same script. And I told you that they're going to keep playing this higher interest rates and all of that. We saw today the treasuries get blown up, mostly because of no liquidity. And we saw the 2-year actually print 475 and the 10-year printed 422. So, and the 2-year seems to have most of the crazy action in it. So there was most of the selling was going on there, which was interesting. And so I think they made a new high and the others did not for the year. So we still have that bump. It's almost, I talked about this before, a humpback curve where you have this big bump at the 2 and then things fade off, and things have inverted a little bit on the 1030s as well. But just moving on, we got, yesterday we had claims come out a little bit worse. Continuing claims upticked a little bit, still looking for a 1.5 number. So maybe we're starting to see the movement on the employment situation. So I'm just looking at this thing from the standpoint of what's going up. I've been targeting this number on continuing claims at 1.5. It's somewhat of a random number, but if you go back for a year or more, so when we were above 1.5, when it came under, there was a switch. It's almost like maybe like a 200-day moving average. Once we get above that 1.5, it starts to be a little more negative, and we'll see how far that goes. The Fed already knows all these numbers when they're talking. When Powell was talking yesterday, he knew all of this. There was no doubt. So just know that all of these central banks, they're on the phone at some point every day talking to each other. They are all coordinated. They all have the same script. They're all going to do the same thing. And it's almost as if, and I made this comment in the live room today, that it's almost, like there's a conspiracy just to crash the markets. So it's unfortunate that we have just all these dynamics that are out there. I teased you for a couple of nights about an event that I wanted to release tonight. I just did not get the work done. So I will be trickling this thing out as probably next week on a couple of different broadcasts. But I'm just telling you right now, these folks are all coordinated together. It's really interesting. There's only a couple of banks that are acting a little different, and the China is one of them. They're trying to support their currency, and of course we saw the dollar get a bid again, but we're still a ways away from making new highs or anything like that. So I'm going to stick to pretty much the normal script that as we close out this nightly broadcast. It's a new era for the Kendall Report. I've been doing nightly broadcast, overnight commentary for 2 decades, and I have not focused in on the daytime or during the market trading exclusively for a very long time. So it was prior to that. So I'm kind of going back to my roots a little bit here, and I'm pretty excited about it. Hopefully it all works out. I don't want to be, it is right now about 7:30 p.m. I'm tired of eating dinner at 8:30. So anyway, but there's more to it than that. I definitely want to be around during market hours. So let's talk about a couple other reports that came out yesterday. Q3 productivity came out, and it is at 0.3, right as it is expected. It was last month, it was a minus 4%, 4.1, I think was the number. And that was like the worst productivity number ever. And a bounce back of 0.3 is really not saying much. So there's a lot of other issues going on in the economy, not just employment looks good, but there's other things going on. And we'll just see, like we saw the JOLTS number tick up. So who knows what's really going on? There's a lot of mixed numbers, especially around the labor. Everything else is becoming clearer. The PMIs, the ISMs, all is coming in a touch weaker. We saw factory orders were up 0.3, so that was okay. But now we move to Friday. This is a big day, and this is always potentially a game changer. And we saw ADP numbers come in just a tad better. We're looking at Friday unemployment, unchanged on unemployment, and job creation 220. And there's some other metrics that are out there that could affect the markets. But I think the Fed already knows this number is coming in decent, maybe even better, just because of their hard stance that they were taking yesterday in the conference call. So, there's really just nothing to get bullish about here. I tried to make it very clear. I said we had to hold 37.40, made it clear, not bullish here. This is like one of the last stands. There's actually one last critical level, and after that, then we're new lows, and we're going into potential free fall. And I know a lot of folks are talking about a bounce, the red wave coming here in the United States. Maybe, who knows? I think Biden was telling us it's going to take days to figure out who won. I don't know where this new phenomena came where you can't count votes anymore, especially if they're electronic. It seemed like, anyway, you guys know where I'm going with that. The point is that, you know, we're coming into some really critical phases here, from economic, from a political. We still have Ukraine situation. I saw, what's his name, the Secretary of Defense, basically doing these massive maneuvers off in North Korea. And so I made the comment, yeah, this is a great idea. Let's threaten another crazy guy with nukes. Very interesting what's going on here, folks. It's almost as if there's a bigger plan going on, and all of us are the, well, I'm not going to go any further with that. I'm going to leave you to finish that sentence for me. Okay, so yeah, so let's go ahead and get into the database. Should be able to get through tonight's broadcast fairly good. And I'll tell you what I will do at the end of this. I want to get through fairly quick. If you guys have some questions for me or something, I'll hang around for about 15 minutes, maybe answer a few questions. So don't put them in now because I'll never see them on the timeline, okay? So just hang with it. And, you know, you guys have been a great, you know, I usually get several thousand views by midnight, my time tonight. So that's going to be different. We'll see how the new live cast goes. There's actually probably more people around during market hours than there is at 10 o'clock Eastern time. So anyway, so let's go ahead and get into the database. So here we go. Remember, we were at all the way at 46%. No longer. We're back below 42. 40.58 bullish. 1,722 sells, only 206 buys. So negative rotation. Everything's starting to fall apart again. And, you know, it's probably not going to stop here. It's pretty sloppy trading. Even if we stay sideways, I'll set up some of the key numbers for the weekly closes here in a few minutes. It's going to be really weird not hanging out with you folks on Sunday night, but be also interesting to have 2 relaxing nights in a weekend. That could be very, very interesting change in my life. So really, the other thing that is going to happen here is that this is coming into Friday, and Friday is the point in time where we're going to get the intermediate trades coming out. Can't imagine there's a positive rotation. We're at 18% long. We have not been able to get over 20% long on this database, I think, for 6 or 7 months. So a lot of our portfolios outside of some of the energy stuff, they're just 60, probably between 60 and 70% in cash. We can't get any traction here. It's just absolutely crazy that there's just no bounce. There's no material bounce. And by that, I mean getting an intermediate cycle. Intermediate cycles tend to last a minimum of somewhere 13 to 18 weeks, right? We've not seen anything. This has just been massive. I mean, here we are in November, and we're still getting hammered. We're not far, a few percents from the low of the market. So there's definitely a lot of negativity. There's nothing to get bullish about. Maybe the red wave next week, if that happens, maybe there's some upside here. But at the moment, it still looks like we're in this negative rotation. You'll see here in a minute, the algos, as I talked about last night, they're projecting from yesterday about 2 or 3 more days of declines, and whether it gets out of hand tomorrow, we'll see if we get some volatility that changes that outlook. But for the moment, it looks like that's what's going to happen. So let's go ahead and get into the technicals. So I'm going to start off with something tonight. I usually start off with the daily. I'm going to show you the hourly, and this is something that we've been using to identify some trends that are going to last maybe for the next 2, 3, 4 hours. And this is going to be a feature when I come in on Monday. One of the plans on at 9:15, I'm going to have some pre-market setups. We'll go through what's going on in the world, how the futures are trading right at that time, and look if there's any key numbers, whether it be the market grid numbers, all that stuff will be released right at that time. And so the interesting thing about this hourly chart, I was looking at this before I came live, is we actually have the algos are suggesting that we're going to see some upside here, and that the patterns are suggesting that we could get to, there's 3 fib targets. You see these dots here. These are the Wavetech Fibonacci target zones, and along with the PPMs, and the high target 3770, 90, and 3803. And it's interesting that the 40 period moving average on this hourly is right there at the 3775. So really at target 1, just a little bit above it right now, but it is declining. So by the time we get there in the morning, we're going to be right into that number. So it does look like we could get some positive rotation coming in here. Let's go ahead and take a look at the daily chart. This is weekly. Let me convert this over. There we go. So daily chart, we got a little bit of a bid. We're trading 27.50 right now, basically flat on the session. But this is what I was showing you on the algos are suggesting that we still have some downticks here. And you can see market grid is in a downward channel now. If we go back, if you recall, back to this reversal on October 13th, that was where the algos started. Just a few days after that, we're projecting for the market to go to 3906, I believe was the number. Let me just get that number. I'll tell you. Yeah, it is 3903. And we actually traded right into those ranges. And then since then, we've rolled over. We printed up to 3914 on the 31st on Monday. And now we're starting to roll down here again. And maybe it's setting up a right shoulder, but here's the numbers that I said I would share with you. Is 50% is 3702. We actually printed that yesterday. Low was 04. A little mini bounce off of that level, not really much. And below the 50% number, remember a few weeks ago when we were down 50% from the 2020 and the market just rallied vertical. And they said, oh, it was a 50% bounce. That story's already gone, right? So what we're seeing here on this is 50% of this last rally that we've seen. And that's at where we printed yesterday, 3704. So use that number, 3704.02 as a pivot. We take that out. Next numbers get really ugly, 3658, 3650. And the algos would argue that from the PPM1 is suggesting we're going to see more momentum drop. All that really means at the moment is that we're going to stay below the 10-period moving average right now, which is 38.22. So somewhere around 38, the 38 handle, 38.14 should be a point to watch for rejections as we come through over the next couple of days. We'll just say, since I won't be back until Monday, is that this should be the point. If we're going to get rejections off these numbers, that's going to happen. Now, PPM2 is telling a slightly different story. It's really saying that we're going to remain and probably oscillate around the 21-period moving average, which is right now 37.39, 37.40. Somebody commented in the live room today is that there was a real battle around that 37.40 number. And what we saw, it was actually we traded all the way up to, I think, 53. And then as we came into that final half hour, the selling just came in relentlessly, pushes below 40 and printed all the way into the close. There was down into the 20 handle again. So what we're seeing from the configuration is it's saying that we should ultimately stay around or above the 21 period moving average, 37.20. So watch how the market acts around there. Use the 37.0204 as a pivot on the downside. And actually, even the 40 period looks pretty good. And I'll cover this since we're not going to be live on Sunday. Originally, if you go back to Monday, it looked like we were going to have I remember the PPMs were projecting, the algos were suggesting that we're going to be a lot of strength coming in. All of a sudden, that's no longer the angle of attack that's going on here. I'm just broadening this range here just a little bit. Let me get off screen. Is what we're seeing is we're trading down to the STX level, which is 37.09. So we traded, as I mentioned, down to 04. You have the 200-week moving average right there at 39.05. So we have that cluster of numbers. So this is an absolute key point on the charts right now. And we're going to have to hold right here. If we don't, we're probably going to collapse down to at least these 36.50 numbers that I just mentioned. But the algos are suggesting that we're going to stay incredibly negative. And if you notice this white line, this thick white line is the 10-week moving average. That's going to be your driver there. So as we come into next week, that number is dropping right now about 26 handles per week. So it's right now at 37.86. It's going to be 37.50 is going to be major resistance we come into next week. So this market is starting to get into trouble. We should see the market grid turn down on Sunday night on the reopen. You should see all this stuff turn down, and that's going to allow for some lower prices, maybe down to 36.58, 50. We'll see how we come in on Monday morning. I look forward to hanging out with you folks on the open on Monday. But this is what the algos were looking really positive at one stage, and all of a sudden that has changed substantially. So the market's getting weaker, really a noisy mess. I'm not going to go into a lot more detail on the weekly here, but this is the same setup as we go through all the other markets. So next we'll cover the NASDAQ. I'm going to stay with the weekly. There's some weekly targets down here that are somewhat crazy. 95.40, 79.36, 69.44. You look at how Apple and these big top-end tech stocks are trading. It's amazing how terrible these things look. It's a lot of times I say if they look really, really terrible, it's probably a bottom, but it doesn't look like there's any bid around. The Microsoft, you go down the whole list of everything that's out there, and it's not good. These targets seem somewhat unrealistic, but all of a sudden 95 handle could be possible. The algos are suggesting that there's a few more weeks of consolidation before we could get into that. So as far as the numbers to watch, the 10-period moving average, just like with this is weekly now that we're looking at, the 10-period moving average is also going to be in play. That's 11,464. That is dropping 200 handles per week. So all of a sudden you're looking at 11.2, and we're trading 10.7 here right now. So that's going to be your rejection point. And the only thing that could happen that would be somewhat encouraging is we'd get a weekly STX buy signal, and we'll see if that even comes into play. I don't think it's going to mean much other than we get some sideways trading, and that's what the algos are suggesting. So we go over to the daily. About as ugly pattern as you can get to. There's some Fibonacci targets right now to the downside. We're looking at 10,489, 10,000, we'll call it even, 13, and 97.19. That's these three red lines here. However, the algos are suggesting that there's probably tomorrow is kind of looking at a potential uptick on the indicator, but we're going to have to get, in the next 2 days, we're going to have to get back above the 10-day moving average, which right now is at 12,265. So watch those numbers there. But the algos are suggesting some support to come in, most likely staying below the 10. Use that 10-week as a major resistance point on the upside for any kind of rallies. You should be able to sell against that if we were to print up there. But it does look like some stabilization on the NASDAQ. Next, we'll cover the Russell. Russell printed up to its 200 the other day, and it looks like there's going to be more downside. It's interesting that the NASDAQ daily algos are predicting at least they're still going to stay negative for a couple of days, but they're trying to turn up. The similar situations happen here on the daily RTY and the Russell futures, but there looks like there's 3 or 4 more days of sideways to down, and we're probably going to challenge around 1755. I would just watch the market grid here. If you've got the indicators, make sure that you just watch those numbers there as far as what's going on with the patterns and how we're trading under this 200 period moving average. One second, folks. Sorry about that. This thing keeps freezing up on me. Okay, so this is the 10-year. I mentioned this last night. We're going to look at, there's some new Fibonacci targets to the upside, 460, 497, and 515. The old numbers were over here at 503, 559, 59, basically 6%. So this is moderated just a little bit here from the standpoint of what the targets are here, but we're seeing that treasuries are starting to bottom out, and that we're going to see this 10-period moving average start to move up again. So I talked about that we probably were going to go in a sideways range. I still think that's it. This is daily. Let's go over to the weekly patterns, and this is really what it's all about. The market grid 418 was R2, R3 427, and 435, and it looked like there was some sort of spike yesterday, but it really, so far the high has been up at 429, so we did not make a new high here. And so this is interesting. It's still within that market grid, and the more interesting part, this is the weekly. The algos are suggesting that we're going to see the 10-period flatten out. So look at the that's 377, but let me get you a mark on that for next week. It's going to be basically 378, 382 is going to be the absolute extreme. That seems even impossible to get to. We did print 392 this week, though, and we printed 420 422 today. We finished at 412, so that we're probably still going to stay in the sideways range that I've been talking about. Next, we'll take a look at crude oil. Crude oil just continues to be locked in that range. One of the things I saw a really interesting narrative that all the PMIs are going down, right? So what that means is that somehow demand for oil is going to get destroyed, the whole end of the world scenario out there. And I don't see on even going out to like a monthly chart, I do see some potential downside, but I don't see a collapse in the oil market. I think regardless that we seem to be watching this economy and the world economy just roll over in a slow motion. Is there going to be a trigger point where everything goes over? I don't know. Maybe, crazy people with nuclear weapons could certainly destroy everything that we know and love. And so that's, but I don't see the setup here. We still have decent trends in the longer term crude. So I still see us locked into that really 86, 92 range. And there still seems like we're going to see some upward bias for a while yet. I think it's interesting. I guess whatever you can put in, what is it, Twitter, 172 characters. I guess you only get one shot at this thing, but some of the stuff out there is being promoted. Maybe it's going to roll over, but I don't think it's in that position just yet. And I think we'll continue to see those ranges that I've been talking about, 86, 92. I showed you, let's go back to a weekly just for a second here. And I showed you, here's the targets here. The targets are for 107, 118, 126 are fib targets here. And the algos are suggesting that we're going to have more positive, that PPM1 is actually going to get into trend mode to the upside, which means the 10-period moving average is going to be rising underneath this action. And that number is 85.66. So there's the 86.92 number. As long as we stay above 86 solidly on a weekly basis, we're going to continue to see the algo is going to be right there. So that's going to be your mark you're going to watch. And there's a fair amount of resistance at the 21 right now because it is negative by 1.6 right now. That's a big negative number. So that's going to be your cap as far as that goes. And that's right at 92. So that's what 86.92 is. Sometimes if you watch markets, they'll get sandwiched between the moving averages. And that's what everything's telling you is going to happen right now. So, you can figure it out. Buy low, sell high. Should be able to buy against 86 somewhere in there and sell against 92. So there's some nice trading range set up there to make some money off of. Weekly chart again. Is on the gold is still trading in this range. We got right up to the 10-period moving average. I've been talking to you about these algo. It looks like we got a shot over the next couple of weeks to see the momentum come out of the 10, which suggests that we're going to get above that number, and that's at 1675. We actually printed 1673 this week with a high of 1676. So we printed right up to the 10-period moving average. It's at a minus 0.66. There was only less than a 20% probability for it to get above that 10% or 10-period moving average on a weekly, and it just got rejected from there. And now we're looking to close lower on the week. If last week's close was at 44, so right now we're printing at 38. So maybe we close lower. I'm not even sure it matters. We're kind of in the midpoint of the range, really. But the algos are suggesting, at least PPM 1 and 2, are suggesting we're going to have an opportunity over the next 2 weeks to see gold catch a bid and start to form a pattern. I think really what we're seeing is just a very sloppy range is set up, and we had a low over here at 22, the high printed up all the way to 1738, and then we're back at 1721. So we basically have traded back and forth, and then today we're printing down at 18. So we made another slightly lower low in this pattern, but we'll see if the algos are right as we come into next week. Plenty to talk about there. Final market is Bitcoin. This is weekly Bitcoin, as I've been talking about. Looks like stable for another week. It looks like Bitcoin's just going to collapse. And I'm willing to say if that's happening, then we're probably seeing some pretty bad things happen in the equity markets. So it's going to get very, very interesting here. I've been talking about this for a while. The key numbers are still 18,500, 18,255 in that range. So anything under 18,255 is going to trigger the potential move down to, I've been talking about this number, like we'll just call it 10,9,700. It would be a complete collapse. And it's amazing how these algos are looking right now. We're going to find out if there's anything to that. These are looking 10 weeks out. So just looking at the next couple weeks, it does look like we're going to see more acceleration to the downside, which once again means that Bitcoin should be trading under the 10-period moving average 19.3. Let me get this number, 19,834, and it is declining. I don't have the right number. It's 18,834, and so it is dropping right now at about 20 handles per week. But in the next 2 weeks, this pattern is going to get real critical. I talked to you last night about how the contraction on the market grid gets like this. It typically it's almost like a squeeze play. There's going to be an acceleration point, and if the algos are right, it's going to be to the downside. So all of a sudden there'll be a broadening channel formed to the downside. So we'll watch how this thing acts over the next several days. So I want to go to one last screen here, and I just want to talk to you folks, and I want to show you a couple of things here. The chart over on the left above me here, I just want to click through a few stocks, and this is what I was talking about. This is Amazon. Amazon's trading 89.31. When we had the big release the other day, we were trading 94. So we are just plummeting here. Apple is a big reversal. These are weekly, okay? We go Apple, Tesla, everything's trying to do weekly reversals, and these are just really big. The chips have been a little stable. They've caught a little bid. Meta is just like the worst stock. I guess this thing's going to zero. Zuckerberg's going to be living in a homeless camp. People, and I was talking about this in the past, that I thought Facebook would be out of business. It's starting to look pretty, not out of business yet, but not looking good. Google plummeting as well. Look at this, down 4% today. Roku, those guys. I mean, anything that PayPal is on the edge of collapsing. We're looking at Intel, another chip stock. Baba actually started to try to firm, but not really that much. It's just probably one of the positives is Uber said that they're not seeing any type of direction and stuff. So anyway, my point is that all these major stocks in the NASDAQ just don't have a bid. Maybe they can catch one, and there'll be a bottom at some phase there. So let's do this. Yeah, so I didn't say Intel has collapsed. Isn't going to. I believe it's already done that, right? So, yeah, it's pretty much been in decline this year, pretty big. You know, we went from 65 to 27, about 50% decline. Yeah, I'll call that a collapse. Anyway, so yeah, Patrick, yeah. So if you folks have some questions, I'm glad to answer a few if you have them. Just I'll spend a few more minutes here. Yeah, so Patrick, on that 3-day trade, it has to be at a high. You want a reversal off a high. When you get the reversals off the bottom and try to get that, it doesn't work out. So you'd have to have an absolute. It would be an upward reversal that can happen if it's at the low. Yeah, I have been in bear markets before. What's your experience for the next 12 months? That's what I'm going to start laying out on this. I've been, we're really experiencing this year what we've experienced in past markets. This has been a very methodical decline that we've had, really. Been very deliberate and just continuing, just hammering this down. And if you go to .com bust, you go to the 2008 and 9, that was a little quicker. I actually am infamous for the 1987 crash, and I've been writing newsletters for 35, 37 years, and I wrote a letter on September 16th, 1987, about 3 weeks before the collapse of the market, and I didn't predict a collapse. What I said, the title of the newsletter is "The Risk Reward in Owning Stocks in the U.S. is Zero. Get Out." That was the headline. And what we were seeing then was pretty ugly stuff. And what happened from Wednesday to Monday morning, maybe it printed on Tuesday, we saw a 40% collapse in prices in basically 3.5 days. It was, when I see declines like this where we've got NASDAQ in the 30 handle, 30%, and we've got S&P down these numbers, that's like that's not even challenging. It's just very methodical. You had time to think. Well, if you tried to think in 87, you lost all your money. In fact, I know a bunch of people that lost. There was a guy named Steve on the Pacific Options Exchange that went from a $14 million net worth to -4 on Friday of the crash in 1987. So this guy's a great trader, completely wiped him out. And, so those things happen to a lot of people. And I was listening, if you go back to the flash crash of 2010, there's a guy named Ben Lichtenstein. I used to use Ben's service because I'm ex-floor trader. I wanted to have the noise from the pit and all the stuff that he was doing. So he had 2 feeds. He had a feed where he sounds like an auctioneer telling you about where the market is, the bid ask, who the players are. This was the old physical S&P pit. And then he had a microphone just stuck basically into the crowd so you can hear the crowd noise. And I just found it really motivating. But if you go look at Flash Crash Ben Lichtenstein, if you haven't seen that video, it's worth a watch. And you see what a collapse looks like. And the 87 crash, that went on for something like that for multiple days. On Friday in 1987, it was option expiration day. Every call option on the index went out worthless. That's never happened since or before. So, those are collapses. I don't know that I think we're still into this methodical hammering of the markets. Interest rates are going to just cause every metric to change if we continue to climb. If they hit the 460 on the 10, then maybe we're printing well over 5 if that humpback stays into the, in the yield curve that I've been talking about, where the 2-year is much higher than everything else. If that humpback continues, then maybe we spike to 5.5 on the 2. I don't know where the number is. Okay, I have projections for moving up toward 5% on the 10. So it depends on how the yield curve goes and where the selling. I still think a lot of the spike that we saw today was a combination of QT and others trying to sell at the same time. And I did see Bank of Japan has been intervening fairly good. I think they were closed today, but over the last several weeks, for the last 2 weeks, they've been intervening. Selling treasuries and actually buying yen, trying to support it. And I think that we're in a much different scenario. So as far as the next 12 months, I'll try to come up with an answer. I'm going to be doing some long-term stuff because we're at the beginning of the month. This is really sort of, next week is the first full week of November, and I'll be bringing up the quarterly chart. I'll be talking about that on the live cast during the week. So there's going to be, like I said, as you come in, remember 9:15 Monday, you're going to look for me on Sunday night. The bell's not going to ring. So that'll be going on for sure. So anyway, let's see if anybody else got anything here. Yeah, Carly, that's interesting. I bought a nice turbo Porsche as a surprise, or as a gift for myself right after the crash. And my trading assistants, they called it the Batmobile. It was black on black. And I even had a car phone. It was the days of car phones. Pretty funny. Yeah. Yeah, I'm just looking at some of these comments here, folks. Just let me read a few things. Thanks, everyone. How many of you, let's ask the question, how many of you are going to be able to be around on daytime broadcasts? I'm just curious about that. Yeah, Evan, who are you? Man, you're a troll. All of a sudden, I'm Frankenstein. What happened to Steve? Yeah, I'm just looking. Okay. So it looks like we're, okay, cool. Very cool. Yeah, so it'll be a rebroadcast like always. So whenever you're available. I know a lot of folks in Europe, they like to wake up, and I have a lot of folks in Europe that watch my broadcast when they get up in the morning. London opens about midnight local time, so we're talking about 4 hours from now. So they're going to be disappointed, I know. I've already heard from some of them. Yeah, see, man, Luke, I think there's quite a few firms out there that are doing, prop traders. I've seen some of these things, from the standpoint of how they're set up and how you get paid. I worked for 2 hedge funds back in the day, and we had a pretty decent payout. I always joke they when you start to, they give you enough money to get on the train and get to work, and then but the profits that they were sharing were pretty substantial. Really, you can't find those kind of deals anymore. But we had some pretty sweet deals. So if you're a decent trader, you can make a lot of money, and actually without risking your money. So it was even better, right? We had about 450 million in a hedge fund. This was 1992. That was a lot of money. Still a lot of money, but that was a lot of money then. So, oh yeah, I bet you're right, Ed. Yeah. So anyway, folks, it's been a pleasure. You know, I have to tell you, when I first started this, when I was doing the edited versions and not the live versions, I've left my office here at 1 and 2 in the morning getting those videos out. It was kind of crazy. I didn't start them until, I'd start working on them at 9 o'clock at night. I'd go home and I'd come back. I can't tell you how many nights I did not want to come back here and do that. So I pushed through it back in the pandemic days. And, so anyway, we'll see how this works. I think it's going to be wonderful. I know it's going to be, everything's going to be good. So, and I know the Australian, that's pretty rough. Just for the record, whoever, I just saw an Australian comment. I lived in Melbourne, Australia, and traded the U.S. markets. And I had to work from basically like 10 o'clock at night till 6 in the morning we worked. And then we used to sleep for 3 hours, come back and trade Sydney. So that's, yeah. So I know what it's like. Trust me, I know what it's like to be down there. So, yeah. So anyway, thanks, Eric. Appreciate it. It's just like a last couple comments here. Yeah, it really has been a pleasure, folks. I mean it. I put a lot into the community. At the level I'm playing on YouTube, there's, I just appreciate everybody that's bought the indicators, supported the channel, supported all the stuff we do, folks that have used our products, Wavetech and the PortfolioXpert. Thank you for all that. It's been really good. All of this stuff is going to kind of come to life. You're going to see, I believe we're going to stop monetizing the channel. And really all we really want to do is really promote the strategies that we're doing and the things that we're doing, and try to give some really deep service. There's going to be actual live training and introduction to a lot of our products, what they're working. Is at some stage, folks, there will be a bottom, and you're going to want to have a good strategy to play with that. So thanks again. All right, I'm going to sign out. So I'm just looking at some of these comments. Okay, folks, have a great evening. Have a good day trading tomorrow. Watch out for crazy volatility, and we'll see you Monday morning. That's weird saying that. It's usually Sunday night. All right, take care, everyone.